Hey folks, my guest today is Oren Zaslansky. He's the CEO and founder of FlockFreight and leads strategy, fundraising, and executive talent recruitment. He also works closely with sales development, product roadmap, and fulfillment teams. They are building an algorithmically carpool LTL freight SaaS tool. It's a mouthful. The growth is incredible. Oren, you ready to take us to the top?
I am. Thanks for having me today.
I don't want to bury the lead here. So I had you on the show back in December. We did an interview, recorded an interview. We go deep. You teach me about shipping from LA to Chicago, trucks, terminals. I learned a bunch of stuff. And you say we're doing about 75 million bucks in run rate. I wanted to feature you in an upcoming issue of the magazine. So I pinged you just to confirm the numbers. And you said, Nathan, we're at 300 run rate now, million. What is going on? How did you get this much growth so quickly?
Well, I think it's fair to say we've achieved product market fit. It took we're almost 6 years old. The end of 2021 will be a 6-year-old company, and the first 4 years were excruciating. I cringe sometimes when I meet people today and they meet us today and they think, oh, this is easy. You guys are killing it. And the reality is like, well, you should have met us in 2018. So, 4 years of building technology, building a business, working on use cases, getting it wrong, getting it right, getting it wrong again, listening to the customer, iterating, not pivoting, but iterating. A very agile environment until we really understood what they needed. And we figured that out in early 2019. And that was a guarantee of a shared truckload at the point of purchase. For the first 3 years, we were aspiring.
Oren, dive deep into that. Dive deep what that means for people not familiar with trucking.
Yeah. So, the common way of moving palletized goods, first of all, goods move on pallets in the United States. So you're a manufacturer and you've made tables, chairs, computers, food, kind of everything and anything. They're put on a pallet and they're sent across a very dense hub and spoke. Think 8 drivers, 8 trucks, 8 terminals, to go from that LA to Chicago example that we spoke about last time. And that is unfortunately a very low quality. It doesn't pick up on time, doesn't deliver, it gets damaged, things get lost and stolen, it's expensive, and it's slow. These are not the key performance indicators you typically hope for. What we do instead is we algorithmically create carpools, or what we now call shared truckloads. So a customer can come to Flock and they could say, hey, I have 4 pallets, I have 12 pallets. I don't really want to see my goods take forever and get lost and get destroyed. What is the alternative? And we would say, well, we're going to use our technology to create a ride share, a truck share program for you, 1 truck, 1 driver, and we'll make sure that truck is full. And so initially for the first 3 years of the firm, you could imagine if you're building a carpooling model, there's technology challenges, but there's also just what we call liquidity. You need volume.
Marketplace.
Marketplace. Got to line up time and space, simultaneity. So, it took us 3 years to get it to the point where it wasn't just aspirational. We'll try to create a shared truckload. The market, our customers told us clearly, if you can guarantee it, then you've got something. If you're just going to try, that's cool. I mean, we were building a great business. We were, raising capital and bringing on customers and retaining them. But the customers told us, if you could guarantee that at the point of purchase, that I wouldn't have to gamble on this, then you would be doing something.
Just to be clear, these truck drivers, you're trying to sign up to add liquidity to your marketplace. And they're saying, Oren, I'm not going to go through the work of signing up if you can't guarantee my truck's going to be full. This is why this is important to you. Is that right?
Well, there's 2 components to it. That's the supply side of the marketplace. Yes. On the demand side of the marketplace, as a manufacturer, as a shipper, that says, if you can guarantee my 4 pallets move hubless, don't see 8 trucks, 8 drivers, 8 terminals. If you can guarantee me that if I do business with FlockFreight, they'll move on 1 truck, 1 driver, and never move through a terminal. That was the big activation moment, the big aha moment. So we built that. And that meant additional optimization capability, more algorithms. But what it really meant was a pricing engine that could sell you a portion of the truck and predict whether or not we at Flock would be able to sell other portions of the truck and ultimately get that truck full. It took us all of 2019 of getting it more wrong than right. And then 2020, it clicks. We go from 25 million to 100 million by the end of the year. We go from, we're not totally explicit about the revenue numbers, but more than 300 million at this point already in October. So we're many multiples of growth on an annualized basis.
How are you measuring that, Oren? So when you say 300 in October, what are you taking October revenue times 12?
Yeah, so that would be, if you said 25 million in the month of September times 12 would be 300 million run rate. We will do more than 25 million in the month of October. So our run rate will be, 330, 340 million, give or take in the
I'm
month
looking
of
for a
October.
gotcha. I mean, that's what everyone listening is going to be looking for. That 25 million in October revenue. I mean, that's SaaS margins, right? I mean, you're not like having to pay truck driver. That's like not like a GMV number, is it?
It's not a GMV number. It is a revenue number, although I would not describe it as SaaS margins, to be fair. We have a fair bit of COGS still in this firm. So we've got an incredibly automated middle of our marketplace. The optimization engine and the pricing engine is phenomenal, right? Like unlike anything that's ever been built before. The demand side of the marketplace, the manufacturer who needs our services, is largely very automated. It's never finished, but we are thrilled, and it is easily stage appropriate. The supply side of our marketplace, we have a lot of COGS. We are still feverishly building out automated integrations with trucking companies, with carriers. So right now, we still have a fair number of humans that are involved in what we call the fulfillment. Hey, Mr. Trucker, are you available? What's the price? Can we get it negotiated? That's the primary focus of R&D. So in our latest fundraising round, announced about a week ago, the preponderance of proceeds.
Hold on, Oren, don't bury that real quick. How much did you raise? What valuation?
We raised $215 million, led by SoftBank Vision Fund 2. They led our last round as well. This was a real preemption. With these numbers, they came to us mid-year, 6 months into the last round. And said, giddy up, we'd like to deploy some more capital. Can you go faster? Do you have a use of proceeds? We said yes, yes, and yes. And so we raised into 215 at a $1.3 billion
and
valuation.
The 113 you raised back in December, the Series C, what valuation was that at?
460, 470.
Well, okay, I mean, incredible. So SoftBank likes marking up its own portfolio is the lesson there, and you're driving incredible growth. That's what I should take.
Well, to be fair, the latter, yes. The former, no, they don't like marking themselves up. I'm not going to speak to it, but you've got a smart audience that can be problematic. We brought in other pretty significant investors into the round. I'd say most notably, we brought in Susquehanna. SIG is a major private equity, growth equity fund at $15-20 billion. So they're participating in this round. We brought in a firm from New York called Eden Capital coming into this round. We also had pro rata, in some cases, I think super pro rata from insiders. So SoftBank was about half of the check in this round. We had another $100 million come in on top of what SoftBank wrote. SoftBank wanted to write a much larger check, initially up to $300 million. And from a round construction standpoint, we manage that number down, I guess it would say, so that our other insiders could also continue to buy up and we could bring in new capital. Everybody loves to see some new faces around the table.
Was 215 like the actual size of the round, or did you raise a bunch more that went into secondary?
No, it was 215 was the size of the round.
Did all that go right to the balance sheet, or did you provide liquidity to some early folks?
A little bit of liquidity to early folks, but only team members, not investors. Okay. No investors wanted out. I can certainly say that.
I believe that. And when you say little to team members, like under 50 million of the 215?
Yes.
Okay, very cool. Let me ask you a different question. Anyone doing the calculations in their heads, they're thinking $300 million run rate, $1.3 billion valuation. That's a very low multiple for others that are like at this revenue stage. Would you just say that's because of your cost structure and the COGS associated with the business model?
Yeah, it's largely an issue of COGS, and we have to balance that all the time. Where every founder does, right? As you think about, we call it the balance between fear and greed. And the key word there is balance. There are times where you don't want to raise because you're very greedy, and there's times where you'll take every dollar thrown at you because you're fearful. As a founder, I've been in both of those situations, and there's no shame. You got to capitalize your business and make payroll. I think the key lies in the balance. Flock is going to be something gigantic. We believe we can build a $50 billion, $100 billion revenue firm. I think it's fair, though, to put us more in an Amazon type quadrant, than a Google type quadrant from a cost structure. We are always going to have some COGS in this firm. And so from a multiple standpoint, they are lower than they are in a true SaaS firm. I think that's fair. The flip side is we're in a US $1 trillion space, and we're going to build many billions in revenue in the next 3 or 4 years. So I think ultimately the exit value of this business will be in the many, many, many billions going into the public markets.
Do you stay private or do you go public market Q2, Q3 next year?
No. We want to stay private for at least a few more years. Let's say 3 years. This is a bit of a educated guess.
Yep. Interesting. Talk to me a little bit more about what metrics are important for you internally that might not be obvious to me, right? How do you measure marketplace liquidity, for example?
Well, the key, I think, metrics for us at this point are we're constraining our growth. We could go faster. We need more automation on the supply side, more integration on the supply side. So we're measuring the total number of transactions that move through automation, single digits going to double digits and scaling. Basically, what percentage of this business in 22 and 23 can we fully automate what we call quote to cash? So from a customer who's just beginning their journey with us all the way through to collecting capital.
Obviously, now, Oren, is that number? Sorry, I don't mean to cut you off, but you told me last time in 2019 you had 10,000 freight bills go through the platform. In 2020, you said it was between 10,000 and 100,000 for 400% growth. Is that what you mean when you say number of quotes going through?
No, I mean, we moved last month now already like 16,000 freight bills in the month. So, that's the growth. When I mean automation, right now on the demand side of the marketplace, it's automated. Customers order via integration or self-serve online. Now, we have humans here to support that, but it's as automated as we kind of feel it should be. Within the middle of the firm, the technology, the hard tech of optimization, the algorithms, the pricing probability work that we do, that is also automated. But when we get to the supply side, hey, truck driver, will you move this freight? And if so, at what cost? How much available space do you have on board? It's only about 10% of the transactions on that end are really totally automated at this point. We want to take that number up. It's not going to be 100%, but to 80 or 90%. And we want to do that in the next 12 to 18 months.
That's Are there any startups that have already figured that out that you'd go buy?
Maybe we're taking a cold hard look at it. There are a few that make that claim. It's unclear it's real. The U.S. truckload industry is enormously fragmented, which in the long run is great news. Through marketplaces thrive in fragmentation. Little players have a chance to participate day one. The challenge though is there's no clear aggregated point of volume where you can just go plug into a startup either as a partner or to acquire. Obviously we've got a pretty big balance sheet. We also have enormous capital partners, who would love. We had a board meeting 2 days ago, and they're asking me, "Hey, any acquisition targets? We got our checkbook out. We feel pretty great about you." And the answer is, we're looking at it. We're looking at it. But it's unclear that acquisitions are always the panacea that many believe. I mean, the data on acquisitions is pretty gruesome. 75 to 80% of acquisitions destroy value. Flock is not being built to say, yay, we're $1 billion company, do some secondaries, and that's that. Flock is being built to be a hardened, scalable platform that goes into the public markets and endures for decades and fundamentally changes the way freight moves in this country initially and then ultimately globally. So it's not to say we're adverse to some easier, fast wins. I mean, those are nice to have, but it's not what we're focused on. We're focused on long-term value.
Mm-hmm. How do you have that long-term focus on? I mean, many startup founders, when they hit a 1.3 billion valuation, they take secondary off the table. It's the first financial windfall for them. It's important for them. And then they go take a next big swing. Did you already have an exit before this? So this is your big swing?
I haven't had exits, but I have founded 2 previous traditional freight companies, and I've made a very nice living for 10, 15 years. So I'm okay. I don't know that I want to disclose my salary here, but I'll tell you, I am far from being the highest paid person at Flock. I've got a relatively modest salary, and that's okay. I'm playing for the equity. And I think, and I'm playing for significance, and I'm playing for purpose. We're the only certified B Corp in freight. We have an opportunity to make a 40% reduction in greenhouse gas if we're successful at scale. That's important to me. I want to, relentlessly remove waste and inefficiency, from the U.S. Transportation system. So, I figure everything worth doing is hard. So let's take hard off the table. It's not that interesting. I want to do something that's purposeful and something significant. And I think I'll be financially rewarded along the way. So, the secondaries are great. You give a lot of comfort. There was some wealth distributed last week, and I couldn't be more proud to have been a part of that, seeing people on my team and the first, the OGs, as we call ourselves.
The 2016 OGs,
The 2016 OGs having an opportunity to, bring some comfort to their families is significant and purposeful. And at the same time, we are just getting started. We take this thing in the public markets and we keep going.
Managing dilution as you scale is a tricky thing. Most founders think about that after the fact and wish they did a bunch of stuff differently. You mentioned equity is really what you're playing for. Can I ask how much equity you've been able to hold on to up to this point?
You can ask. I'm not going to answer that question directly.
Can you give me a range?
I mean, I'm going to own a small piece of something very big.
It's a lot. That's a political answer.
It's a lot on paper. But look, let me say this that I think is helpful to your audience, because understanding my wealth on paper, I don't know if it's helpful. What is helpful, this was advice I was given by my lead investor from Google Ventures, who led our Series A GD, a guy named Joe Kraus. Joe Kraus is a super successful founder, founded Excite back in the 90s.
He was your Series
search
B
engine.
Lead?
Series A.
Oh, Series A lead. This was 18 million in 2017, right?
Yeah. Yep.
And that you were what? That was probably like what, 90, $100 million valuation back then?
No, half that. That was 57 or 8. It was actually about 6. No, post. The pre was like 41, 42, something along those lines.
Okay, back to your Google guy.
And what he taught me was, look, you're going to be taking on a lot of dilution along the way. And I get it, as a former founder, now turned investor, it's going to make you crazy, but let me convince you otherwise. You have a certain number of shares, and that number of shares doesn't change unless you sell them. And if you sell them, then you have sold them. But until you sell them, that numerator, so to speak, does not change. The denominator of the firm is changing, right? You're issuing new shares every time you raise money. But you have a certain number of shares. Your job is to take it from a tenth of a penny, when you found and you do your, hopefully 83B, founders out there, do your 83B. QSBS is real, at least for now. It may go away. But you want that. You really want that. And your job is taking from a tenth of a penny to a penny, to $1, to $10, to $50, to $100, to hundreds of dollars, if you can. So I've hung on to that. My percentage of ownership has gone down. But what is hopefully helpful to some of your viewers and your listeners is I don't think about it anymore. I really don't, because I need capital. I need capital to build this business. We are not a traditional high margin, SaaS firm, but we're building something absolutely massive. My job complexity is that, like, we're a big business, hundreds of millions in revenue, hundreds and hundreds of employees. Need to double our headcount.
How many now? How much headcount?
Almost 350, 340 employees.
Okay.
We're going to be 700-800 by this time next year. That's just complicated, right? From an organizational structure and leadership standpoint, that's really where my time is going. But my number of shares doesn't change. But if I can take the share price to 100, if I can take it to 150, going into an IPO, that is a lot of money. I mean, it's already a lot of money now. That is a lot of money. So for the founders out there, you're going to make yourself crazy going from 100% of a pie, or two co-founders, 50-50, however you split it up. Yeah, that number goes down. And for most founders, it ends up in the single digits. Yeah. I am not yet in the single digits. I was just
going to finish with the last question and say, Oren, I promise I'll move on after this, but more or less than 10%, but you just answered it. So more than 10% right now.
I'm a double digit guy, but to be fair, I was mostly a sole founder. I have some co-founders that are advisors. They're not operators. So they started with single digits pre-dilution, and I had basically the whole cap table. But number of shares by the price per share, and then get it liquid. That's the job.
There you guys go. Oren, last question here, because you're one of the few I can ask this. You want to use investors almost like employees. You want to bring them on strategically, give them work to do, and make them hustle like hell to help build the business. How do you give work to SoftBank? How do you ask someone that big, that powerful, that impactful to do work for you?
Good investors want to be helpful, and they know they're not us. So SoftBank is famous. They're infamous. I get it. Working with Masa is a tiny piece of what we do when you're a SoftBank portfolio company, but really you live within your deal team. So within my deal team, who, of course, is on my board, again, board meeting on Wednesday, I challenged my team in a couple of things. I said, number one, I understand how the private markets think. We've raised 9 rounds, about half priced, kind of Series C through Series D, and also some notes in between, because getting started, or bridges, up bridges, down, never down bridges, but kind of the good bridges and the hard bridges along the way. And I said, look, I know how the private markets think about us. I understand what the story is. I've done it 9 times. I understand what the key metrics are in order to create shareholder value. I don't yet understand the public markets, and yet this business is headed to the public markets. We're not yet ready to hire a banker. We're not yet ready to start talking to the exchanges. So I wouldn't quite call us pre-IPO, but we're pre-IPO, meaning Find me people that can educate me on the story and under the key metrics to understand how we need to shape this firm over the next 2 or 3 years to get it ready for the public markets. You find those people. I'm too busy. Go to work. Number one. Number two is talent. We're looking for a vice president of engineering, a VPE. Our VPE was promoted into CTO. He's phenomenal. Lou Sines, the first person we hired, absolutely transformative. And now we need to recruit a VPE to replace him on the day to day. Tough role to fill, as you can imagine. Tough labor markets. So I put my investors to work, and I literally said this to them. I would say, founders also, don't be shy of putting your board to work. I know you love all your kids equally, meaning your portcos, but you love me a little more. Send me the top talent. Let me know if there's a company dying and we could do an acqui-hire. You see a lot of things I don't see. Love me just a little more than your other children and help us bring out a world-class VPE.
Guys, there you have it, Oren, FlockFreight. Oren, if people want to learn more about you and the business, where can they visit?
FlockFreight.com. You can drop me a note directly, Oren, Oren, at FlockFreight.com. I promise that's me. That doesn't go to marketing or somebody else. And I'd love to meet folks.
And the 1.3 valuation pre or post?
Post.
It was post. Guys, there you have it. Incredible growth, 75 million in terms of run rate. Just, 10 months ago, now over 300,000 in terms of run rate, 25 million a month and growing very quick. They'll double their teams over the next year, really focus on building a decades-long company, eventually in the public markets, call it in 2 to 3 years. We'll see what happens next. Oren, thank you for taking us to the top.
Thanks for having me on.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.